For 7 years, I was a man possessed. I was hunting for the holy grail of trading, that one perfect strategy that promised 0 losses and infinite riches. I blew thousands of dollars and torched multiple accounts. I honestly pushed my life to the very brink of collapse. And then I found it. But it wasn't a secret indicator or some magical formula. It was a brutal, soul-crushing realization. The Grail forced me to face the one thing I've been avoiding this whole time, myself. This isn't the story I ever wanted to tell, but is the one you absolutely need to hear. It all kicked off in 2019. Picture this. A wide-eyed rookie with a fresh $500 in my account. I was daydreaming about financial freedom and maybe a Lamborghini. I dove headfirst into the forex market, my eyes glued to EUR/USD. I was totally convinced the indicators were some kind of magic. I saw a green candle pop and thought, this is it, a breakout. I slammed the buy button with no plan, no stop loss, no clue. That night, the price dumped 200 pips against me. My account was down 40% in a single week. That was mistake number 1. Trading without a strategy. I was just a gambler in a trader's jacket. I spent the next year in total chaos, chasing every flicker on the screen. I'd try scalping the 1-minute chart, then switch to swing trading the daily. There were no rules, only gut feelings and pure desperation. Have you ever revenge traded after a stupid loss? I lived there. I remember opening 10 separate trades on GBP/JPY, fueled by pure rage. It was a massacre. My account was sliced in half in hours. I didn't keep a journal. I never back-tested a single thing. Then 2020 rolled around and the pandemic hit. The markets went absolutely nuts with volatility. After a year of failing with no strategy, I came to a new, terrible conclusion. I felt the secret wasn't simplicity, but massive complexity. I convinced myself pros had a secret handshake of indicators. If I could just find it, I'd unlock the markets. This was mistake number 2. Overcomplicating everything. My charts turned into a nauseating rainbow of lines and oscillators. MACD, RSI, Bollinger Bands, 5 moving averages, Ichimoku clouds. Here was a technical Jackson Pollock painting. I was staring at this mess, trying to trade USD to JPY. RSI was overbought, but MACD was crossing up. The signals were all fighting. I just froze. I entered late and got completely shredded. I lost $2,000 on that one trade because of total paralysis. Here's a shocking fact. Studies show that success in trading is 60% psychology, 30% risk management, and only 10% strategy. I was focused on the 10% and it was killing me. By the 2021 bull run, crypto hype was impossible to ignore. Bitcoin was screaming for the moon. And I wouldn't miss out this time. This is where I made the single most destructive mistake of my journey. Mistake number 3. Throwing risk management out the window. I was using 1-to-100 leverage, placing trades where one position was 50% of my capital. I thought a stop loss was for people who planned on being low. I planned on being rich. Then the flash crash hit. In a matter of hours, my screen lit up with the most dreaded notification. Margin call. My account was liquidated. Zeroed out. Gone. The rules I'd ignored came screaming back at me. Risk a maximum of 1 to 2% of your capital per trade. Always use a stop loss. Aim for a 1 to 3 risk to reward ratio. I remembered holding a losing AUD/USD short for weeks, praying it would turn around. That one trade cost me $3,000 because I couldn't stomach a small loss. This time, the loss wasn't small. It was everything. The 2022 bear market arrived. And it felt personal. I was emotionally shattered. I was trading with raw, unfiltered emotion. This was mistake number 4. Letting FOMO, fear, and revenge drive every click. I'd see a headline and FOMO buy euro to US dollar right at the peak. Then I'd panic sell at the bottom for a huge loss. Blinded by rage, I'd slam a revenge short, hoping to make it back, and lose again. My heart was constantly pounding. I wasn't sleeping. Psychologists call this tilt. Traders call it account suicide. The only win I had that year was a day I skipped a trade because I was too angry. That small act of discipline saved me $500. But mostly, my emotions were flooring it straight into a brick wall. At this low point, I realized the solution isn't just about extreme saving. For most of us, the real path to freedom is about increasing our active income. As someone with deep experience in the financial markets, I know how to generate additional profit, even with a small starting capital. I'm talking about an income stream that can become comparable to your salary. This is the money you can then invest for the long term. I share exactly how to do this in my free Telegram community, is where I give my insights on building real wealth from the markets. Join me at Austin. The link is in the description, and let's get started. By 2023, I was caught in another trap, the illusion of control. Since nothing else worked, I figured the answer was to just do more. More trades, more pairs, more action. It was pure chaos. Mistake number 5. Overtrading with a total lack of focus. I'd scalp indices in the morning and swing trade 10 different forex pairs on the side. I remember one Tuesday perfectly. I had 5 trades open. I hadn't realized they were all heavily correlated to the US dollar. When the dollar shot up unexpectedly, all 5 tanked at the same time. I lost $4,000 in a couple of hours. Do you know what the worst part was? The fix was so obvious in hindsight. Focus on 1 or 2 pairs. Limit yourself to a few well-planned trades, but I was addicted to the action, not the process. At this point, I finally hit rock bottom. I was down to my last $500. I had deposited over $20,000 over the years, and it was all gone. I was exhausted, broke, and ready to quit forever. Staring at that last $500, something in me finally broke. The brutal realization hit me like a ton of bricks. The Holy Grail wasn't a system I could buy or a secret I could find. The problem wasn't the market. The problem was me. I took a full month off from trading. When I came back, I did the one thing I had avoided for 7 years. I simplified. I wiped every single indicator off my charts. All of them. I was left with nothing but pure, clean price action. I focused on the absolute basics, support and resistance, and candlestick patterns, and most importantly, an unbreakable stop loss on every single trade. I built a simple plan. Risk only 1% of my account per trade, and only take trades with at least a 1 to 3 risk-reward potential. Then I went back to a demo account and back-tested for 100 trades. For the first time ever, I saw consistency. The wins were boring, but they were adding up. And here's the truth I finally stumbled upon. There is no single Holy Grail strategy that works forever. The market is always changing. A trend-following system gets chewed up in a ranking market. A range trading strategy gets run over by a strong trend. The real Holy Grail isn't a strategy. It's a framework. It's a combination of 3 pillars. First, you need a statistical edge. This just means your system, over many trades, makes more than it loses. You could have a 55% win rate, but if your wins are double your losses, you have an edge. Second, you need to be adaptable. My journal showed my hedge was fading extremes in ranging markets. But for trends, I learned to use a simple 20 EMA pullback strategy. The key is knowing which market you're in and applying the right tool, or just sitting on your hands if you don't have an edge. And third, and most importantly, risk management is key. Risking a small, fixed 1% guarantees you'll survive the inevitable losing streaks. Even a system with a 40% win rate can be wildly profitable with a 1 to 3 risk to reward ratio. The math doesn't lie. That is the Holy Grail. After 6 straight green months on demo, I went live with my last $500. My routine became methodical, almost boring. I scanned the news, then focus on one single pair, Euro to US dollar. I wait for my setup on a higher time frame, like a trend line break. Then I wait for a pullback on a lower time frame for my entry. Stop loss below the swing low. Target the next clear level of resistance. That's it. My best recent win came during NFP week. I shorted EUR/USD after a news spike. I stuck to my plan, risked $100, and made $400. I didn't get greedy. I just executed my plan. I grew that $500 account to $15,000 in about 18 months. Now I'm compounding it up towards $50,000. There's no Lambo, but there's also no stress. I'm aiming for realistic returns, around 10 to 20% a month, not the fantasy 100% I used to chase. The Holy Grail wasn't a treasure map. It was learning to be a professional. You're probably thinking, okay, Austin, just give me your exact setup. But if you've heard anything I said, you know that's the wrong question. It's not about my system. It's about building your own framework on these principles. My 7-year search cost me over $22,000 and countless sleepless nights. The truth I found was this. The Holy Grail is disciplined execution of a positive expectancy strategy. wrapped in ironclad risk management. Risk first, plan always, and keep your emotions on a leash. Just last month, I was tempted by the hype around a new AI trading bot. The old me would have jumped on it instantly, but I remembered my lessons, tested it on a demo, and it had a 30% drawdown in a week. I skipped it, stuck to my boring plan, and ended the month up 8%. No shiny object will ever beat disciplined basics. You're sick of blowing up accounts and feeling that pit in your stomach? I want to help. I've set up a free Telegram channel, F Sustin, to share my weekly setups and risk rules. The link is in the description. Join us, and let's build your own version of the real Holy Grail. You can do this.